Thanks for tuning in to your daily dose of quick real estate updates, local housing trends, and market data, plus tips, tools, and strategies to help you buy, rent, or invest with confidence. You're now getting ready with RealiCare Reports, powered by the innovation team, Cami and Rex. Now go grab your favorite morning breakfast, coffee or tea, and let's enjoy today's episode.
Welcome to the Deep Dive, where we try to cut through some of the noise. You know, it's pretty fascinating how this collective thing, economic sentiment, this feeling people have, how you can actually measure it, and what it tells us about the economy, maybe even more than just the dry numbers sometimes.
It really is. I mean, consumer confidence, especially, it often gives you a heads up, right? A sort of leading indicator.
A snapshot of what might be coming down the pike.
Exactly. Before you even see it in the traditional data, what people feel, it directly impacts how they spend, how they save.
And today we're going to take a close look at exactly the latest Florida Consumer Sentiment Report. This is for June 2025.
Okay.
Our main source here is a news article from Florida Realtors, and they're basing it on a study, a really thorough one, from the University of Florida's Bureau of Economic and Business Research. BEBR, they call it.
Right, BEBR, good source.
Right.
So our mission today really is to unpack what's behind the sentiment number.
Yeah, what's driving it?
What's driving it, what it means for Floridians, right now, and maybe what wider economic signals we should be paying attention to.
We want to help you get a quick handle on these, well, sometimes complex indicators without getting bogged down.
Let's do it.
Okay, so let's jump in. The big picture first. Florida's consumer sentiment, it's up. Second month in a row it's increased. In June, it climbed 3.1 points, landing at 84.1. That's up from a revised 81 in May.
So 84.1. That's, well, it's moderate confidence, but definitely improving. Still, worth remembering, it's not quite back to where we were at the start of the year.
Good point. And it's not just Florida, right? The national picture showed something similar.
It did, yeah. National sentiment actually saw a sharper jump, up 8.5 points. So it suggests, a broader optimism maybe taking hold across the U.S. And back in Florida, importantly, all 5 components of the index improved, and that's for the second month running.
Okay, all 5 components. Can you just quickly remind us what those are so we know what exactly is getting better here?
Sure thing. So the 5 are, first, how people feel about their personal financial situation now compared to a year ago.
Okay.
Second, what they expect their personal finances to be like a year from now.
Got it. Future view.
Then third, their expectations for the overall U.S. economy in the next year. Fourth, same thing, but looking out over the next 5 years.
Longer term.
Right. And fifth, crucially, whether they think now is a good time to buy a big ticket item. Like a fridge, furniture, that kind of thing.
And all 5 went up.
All 5 went up, which, suggests a pretty comprehensive boost. It's not just one thing.
So that leads us nicely to the next question. What's really driving this upward trend, it looks like the main engine, is how Floridians feel about their own pockets.
That's exactly it. The report really emphasizes that the gain is primarily driven by people's assessment of their personal finances.
And which part specifically? Is it feeling better now or expecting things to get better later?
It's mainly the looking back part, actually. Opinions on personal financial situations compared with a year ago that jumped 5.6 points. Went from 72 up to 77.6.
Wow, 5.6 points.
Yeah, that was the single biggest gain among all 5 components this month.
Interesting.
And the source also notes, kind of interestingly, that this specific view, personal finances compared to a year ago, it's been getting steadily better since the presidential election last November.
So a sustained trend there. Okay. And building on that, you mentioned the good time to buy component also went up.
It did, significantly. Up 3.7 points from 73.9 to 77.6.
So people are feeling better about their current finances, and that translates into feeling, well, maybe secure enough to actually buy that new sofa or washing machine?
It certainly suggests that, yeah, it's a pretty strong signal of confidence when people feel ready to commit to those larger household purchases.
But like always, there are nuances, right? The report mentioned a split. These positive views were pretty widespread,
Except among younger people, specifically those under 60. They actually reported more negative views on their spending intentions.
Why do you think that is? Any clues in the report?
The report itself doesn't spell out the exact reasons, but you could speculate, right? Maybe it's things like student debt burdens or the rising cost of living hitting younger demographics harder.
Housing costs, maybe?
Could be housing, could be specific job market worries. It's hard to say for sure from this data alone, but it's a really important reminder that, these overall averages can hide some pretty significant differences between groups.
Absolutely. Okay, so that's the now picture. Let's shift focus a bit to the future. Expectations improved, you said, but maybe with a sigh of caution.
Exactly. Cautious optimism is a good way to put it. So looking ahead, expectations about personal finances a year from now. Yeah. There rose 2 points, from 90.7 to 92.7.
Okay, positive, but smaller than the looking back jump.
Right. And then expectations for the U.S. economy over the next year. That went up 2.9 points from 80.8 to 83.7.
Still moving up. Still moving up. And even the 5-year outlook for the U.S. economy edged up slightly, 1.4 points, from 87.5 to 88.9. So yes, improvement across the board on future expectations, but the gains are a bit more muted.
And we see another split here too, don't we, based on income?
We do. The report highlights that people earning under $50,000 a year consistently reported more negative views across all 3 of those future-looking components.
So what does that tell us? Lower income households just aren't feeling that same sense of future improvement?
It strongly suggests that, yeah. While some folks are feeling more secure about what's coming, these households seem to be facing, well, persistent headwinds.
Like inflation hitting them harder.
That's a likely factor, certainly. Inflation disproportionately impacts lower income budgets. Or maybe it's slower wage growth in the jobs they typically hold. It really underscores that even with overall positive trends, that caution is very real for a big chunk of the population.
Okay, so let's pull back and look at the wider economic context that's shaping these feelings. Yeah. What did the sources say about the backdrop? Well, the economy seemed pretty stable overall, even after those first 3 months of tariff implementation kicked in.
Right, the tariffs.
The labor market's been strong, unemployment still historically low, and inflation, while maybe a touch above the Fed's 2% target, has been relatively modest.
And the Fed reacted to that how?
By holding steady. They kept interest rates the same in June. That was the 4th meeting in a row with no change.
Which suggests they're still watching, still uncertain maybe, especially about those tariffs and inflation.
Exactly. There's definitely uncertainty there. And perhaps worryingly, there was some recent data from the Bureau of Economic Analysis showing that consumer spending actually weakened a bit in May.
So the big question is all this policy uncertainty, particularly around trade, starting to actually, bite? Is it affecting how people spend their money day to day?
That seems to be the concern. And this is where Hector Sandoval from USBEBR offers some really key perspective.
He's the director of the Economic Analysis Program there.
Right. And he points directly to this ongoing uncertainty, especially around trade policy, saying it continues to cloud the outlook.
It's striking how something like trade talks, say with Canada, can actually filter down and potentially affect whether someone feels confident buying, a new appliance.
It really highlights that connection. Sandoval notes that, new tariff threats continue to surface. He mentions the recent announcement about potentially ending trade talks with Canada.
Right.
And he makes an interesting point. While maybe consumers are becoming a bit less sensitive to every single announcement because it's so back and forth.
Kind of tuning it out?
Maybe a little.
Yeah.
But he says the continued uncertainty itself, that underlying instability, could still be weighing on overall confidence.
That makes sense. The constant will they, won't they?
Precisely. And Sandoval kind of sums it all up quite nicely. He says, look, even though consumers are feeling a bit more optimistic and things like, say, turmoil in the Middle East haven't really hit sentiment yet, overall confidence is still below where it was at the start of the year. So his conclusion is basically we need to keep watching, keep monitoring sentiment closely in the coming months.
To see how things like persistent inflation, these trade tensions, global instability, how they might eventually shape what people expect and how they behave.
Exactly. It's a delicate balance right now.
So when we talk about these numbers, like the 84.1 index score, maybe it's worth just briefly touching on how they actually get this number. How is it measured?
Good idea. It's quite a rigorous process. The U.S. study for this report was done between May 1st and June 26th.
Okay.
They surveyed 480 people. It was a mix. Some reached on cell phones, others through an online panel. And they carefully selected these folks to represent a real cross-section of Florida's demographics.
And then they weight the results, right, to make sure it accurately reflects the state's population.
That's right. They adjust the raw data based on things like which county people live in, their age group, their sex. It ensures the final index is properly representative.
And the index itself, that number like 84.1, what's the scale?
It's benchmarked way back to 1966. So a score of 100 means confidence is the same as it was back then.
Okay.
The lowest possible score is 2. The highest is 150. So 84.1 sits, reasonably comfortably above the historical midpoint, but well below the peak levels.
Got it. So for you listening in, let's try and boil this down. Key takeaways from this deep dive. Floridians are feeling notably better about their personal finances compared to a year ago.
Yes, that's the main driver.
And that's boosting overall sentiment and making people a bit more willing to consider larger household purchases.
Definitely.
But there's still this significant undercurrent of caution, especially looking ahead.
Right. Broader economic uncertainties, particularly around trade policy, seem to be keeping a lid on things. And it's crucial to remember this optimism isn't universal.
Yeah, that split we talked about. Younger Floridians and those with lower incomes, they're expressing more apprehension, particularly about the future.
Exactly.
Yeah.
So while the headline number is up, the story underneath is, well, more complex. It really shows how economic shifts don't impact everyone in the same way.
It really does. Which leaves you with a final thought, doesn't it? We look at these collective sentiment numbers, but how much does that overall feeling really steer our own individual choices day to day?
And how much does that collective feeling, in turn, actually nudge the direction of the whole economy?
Yeah. How much does the feeling matter compared to the cold, hard data? Something to think about.
Yeah.
Thanks for joining us for this deep dive.
Well, that wraps up today's episode of RealiCare Reports, where real estate meets real life. For more updates, tools, and insights that will help you buy, rent, or invest with confidence, be sure to follow, subscribe, stay connected, stay informed, and stay ready. Until next time.